Hello there, this is James, and you're watching Tixee Live. In today's program, I want to discuss the bit of calm that the market is currently experiencing, and ask the question, really, how long will that last? But and a couple other things as well to have a little chat about. But before we get into that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, it's Tuesday. And today, the markets are feeling a little teeny weeny bit calmer, a little bit calmer than it has been, which is understandable, for the markets to react a little bit like this. Because after last week, which was absolute turmoil, don't forget, last week, the markets experienced its biggest weekly drop in world stocks since March 2020, driven by the fact that we had 3 central banks raise interest rates last week. So that's why we had a lot of fear in the market. And we still have it. I mean, Lagarde yesterday, in a little speech. Again, those of you who were kindly with me yesterday, we spoke about, we were live while she was live. So we were having a chat about it at the time, and she did really add an awful lot to stuff we don't know already, for example. But she did say that the risk of abrupt correction on Europe's financial and housing market is high. Financial stability risks have perceivably increased. She loves her words. So again, she did again talk a bit doom and gloom, but still very dovish speech, so to speak. But today, we still got, like I said, though the markets is calm currently at the moment, we still obviously have talk of that dreaded R word. Okay, that dreaded R word, the recession word. Today, in an interview he did in Doha, in Qatar. It was in Doha. I did it from New York, but there's a financial gathering in Doha happening at the moment. He did an interview. And he said recession is likely, in his opinion, is likely. As well as that, today, you have Goldman Sachs. I've said there's 30% chance of recession. The previous percentage they put down was 15%. So it's doubled their original view of if we're going to fall into a recession. So they moved it to 30% chances of recession. On the other side, though, President Joe Biden has said in televised speech, he said that recession in the US is entirely avoidable. So, he's being a little bit, probably the only one I've heard be a bit optimistic that we can avoid that dreaded R. But anyway, even so, we talked about it yesterday. The markets, as they stand, we're going to have a look at a couple of things in a minute, are fairly calm. The question I have to ask is how long would this calm last in the markets? Now, in my personal opinion, I think unless we see signs of inflation slowly decreasing, okay, which would then mean that the central banks will have to be less aggressive. Unless we see that, then we are going to still be experiencing incredible volatile markets. And I think though we're calmer today, and the reason why I think we're calmer today, because there's only one event coming up. The market is waiting for some key inflation data to come out, i.e. the UK CPI, which is due tomorrow, and the Canadian tomorrow. Tomorrow is due. And then Canadian CPI, which is also due tomorrow. As well as that, and I think the reason why the market's a bit calmer at the moment is because we're also waiting for what Jay Powell says to Congress on Wednesday and Thursday. Waiting for his testimony, waiting to see how hawkish his words are. So this is why the market's a little bit calmer at the moment. And like I said, we'll have a quick look at some things in a minute. and look at some levels, etc. On other news, though, just to sort of carry on the normal story of what the market is transfixed with, which is interest rates and inflation. The RBA today confirmed in their minutes that further rate hikes are to come. Don't forget, they were aggressive and they raised interest rates by 50 basic points last couple of weeks ago. So they are expecting again to increase interest rates as well. So they have said they will. However, Governor Lowe, I believe it's Lowe, or member of RBI, of the Reserve Bank of Australia, he did say that any further interest rate hikes, he can't see it being as aggressive as 75 basis points. So he's only expecting only 50 basic points. So that's what he said on that. Anyway, yeah, and today, like I said, the only real main economic information coming out today is from Canada, which is core retail sales month on month. Expectation for that number is 0.6%. So it'll be interesting to see how the loonie reacts around that. Just so you know, okay, there is a steady decline in retail sales in Canada. In March, it was 2.5%, okay? In April, 2.1%, and in May, 2.4%. So it's obviously 0.6 is a lot lower than their expectation, or than it was previously at 2.4. But yeah, so that's the only major thing. But anyway, let's have a quick look and have a look at the market, see what things are, how things. Let's start off with the euro. Sorry, throat's getting dry again. So this is the euro. It is trading well above 1.05 now. It's currently trading at 1.0559. So we're finding a few balls with that. It's above the 50, the 100, and the 200-day moving average. Okay, I do see a potential key area of 1.578. Okay, and the RSI at the moment it's just touching the 70, so it's not clearly above it, showing that there is signs of it being overbought at the moment. But yeah, so it's it's in a fairly reasonable mood against the dollar, but I mainly think because that's slightly dollar weakness as well. The cable, okay, not huge action. Don't forget the US was closed yesterday, so we had quite thin liquidity on the market. Currently trading at 12294, above the 100, the 50, and the 200-day moving average. Above that key level as well, I've been watching for a while, which is 121.97. So it's a good distance above that. But like I say, I think cable traders or sterling traders in general are really going to be waiting for that all important CPI, which comes out tomorrow, and we'll discuss a bit more about that later, because that's what I think the market, certainly the sterling traders, are going to be waiting for, is that. I mean, we do have a couple of members of Bank of England speaking today. I think it was Pill and I can't remember. I think it's Trinon, I think he's speaking. Both are more in the dovish camp, but I don't think, like I say, unless they say anything really dramatic, that's going to really capture the attention of any sort of sterling traders. Gold is still stuck in that area, bless it. Still trading above that key level where I've been watching at 1,828. If we look at on the 4 hour, we are still capped within that range at the moment. Slightly below the 100, the 50, and the 200-day moving average as well. So it is really range trading. I don't think, though there is a few gold bulls there, I don't think there's enough to really push it through. So there we are. Like I say, a calm at the moment. But that's standard practice. When you've had such a dramatic week, when you've had huge sell-offs, you usually tend to find that the market takes a bit of time to catch its breath, and you see a little bit of people jumping in again. And this is common practice. Because last week was such a horrendous week. Like I say, it was the biggest weekly drop in world stocks since March 2020. No wonder at the moment the market is taking a breather and catching its breath a little bit. But like I say, I don't think that's going to last for very long. So anyway, what else is due events-wise? Like I said, we have Canadian retail sales later, Bank of Japan minutes. But the big one, in my opinion, especially for sterling traders, CPI for the United Kingdom. And I will do a preview of that this afternoon. And Powell testifies in Congress, German manufacturing PMI, UK services PMI, and US initial claims. So these are all big events to come. Okay, as it currently stands, like I said, the market's fairly calm. FTSE's up 0.73%, DAX is up 1.10%, and Eurostoxx currently trading 1.38% higher. So there we go. All right, don't forget, you can ask me questions whenever you wish. You know, this is what I'm here for, so please feel free to ask me questions. If you have any questions in relation to anything related to the market or my maybe experience or stories and things like that, ask me. I'm here for that. So please feel free to ask me whenever you wish. But like I say, don't forget, I'll be going on again this afternoon at 1 p.m. UTC. I want to discuss this afternoon a couple of things. I want to do a preview of the all-important UK CPI. Okay, so don't forget the expectation of that is 9.8%. So we'll do a special preview on that this afternoon because I really think that could be a potential big event, especially for sterling traders. Plus, there's a little story of a car manufacturer you might have heard of called Tesla. So I want to have a little chat about that because don't forget, the US market was closed yesterday, but it opens today. So it'll be interesting to see about that story about Tesla and have a quick look at that before the US opens. So don't forget, you can join me. Please join me, 1 p.m. UTC. Okay, so there's no questions at the moment, which is never a problem, but always feel free. In fact, actually, there was a question I noticed yesterday, just as I went off air. A gentleman asked a question, and unfortunately, I couldn't answer it in time because I'd gone off air at that point. And we talked about, yesterday I mentioned about gas, and I talked about gas prices, and that gas was under pressure, and I talked about Germany opening up its coal-fired power stations again. This gentleman asked, just as I'd gone off air, he said, coal, why not nuclear? Why not Germans have gone for nuclear? Now, Germany doesn't have a massive nuclear program. They have, I think, about a total of 6. I think they've maybe got 3 left. And they're looking to close the remaining of those nuclear power plants down and stop using nuclear power altogether. In fact, nuclear power currently only covers 13% of total of all their power needs. So this is probably why, because I think they're dead set to close all of them by the end of the year. I think that's why they went to coal, not to nuclear. But I hope you watched this episode and that answers that was the answer to your question, my friend. It's because they're looking to close out nuclear power stations. So that was the answer. So yeah, don't forget, ask me questions. If you think of questions later down the line, add it into the comments below, and I will see it and I will answer them live on air. Okay, so please remember that. Anyway, okay, I'm back on 1 p.m. like I say, but if you're watching me on Facebook and you like it, by all means, give us a follow if you like. If you're watching me on YouTube and you've liked it, subscribe if you like. Hit the notification button so next time you know when I'm going live. If you've enjoyed this episode and found it interesting and insightful, give me one of those. It'd be quite nice to know that you're liking it. I see I've got 1 like already, which is very nice. So thank you for that. It does cheer me up when I see that. But anyway, till next time, remember, these little programs are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.